Welcome to Talk Tickers. Forestar's Q1 2026 earnings report just dropped, and it is a classic case of beat versus miss. So today, we are going to unpack exactly what that means for the stock and for you.
All right, let's get right into it. We're going to start with those conflicting headline numbers. Then we'll unpack what management is actually doing about it. After that, we'll see how the market reacted, and we'll finish up with our forward-looking call.
So, Forestar's results hit the wire on January 20th, and right away you could see this mixed message. It created some immediate tension and left investors asking one clear question. What's the real story here?
On the top line, things looked pretty good. A solid revenue beat. They pulled in $273 million in sales, which was more than $7.5 million above what everyone was expecting. You gotta say, that's a strong start.
But the bottom line told a very different story. Earnings per share came in at 30 cents, and Wall Street was looking for 32. Now, it's a small miss, just 2 cents, but you know how it is. A miss is a miss.
And honestly, this was the number that really grabbed everyone's attention. Lots sold. That's the key volume metric for a land developer, right? Well, that number was down a whopping 17% from the same time last year. That is a huge slowdown, and you can bet the market noticed.
So you've got this weird picture. Revenue is up, but volume is way down, and earnings missed. How on earth does management explain that? Let's get into their playbook and see how they're trying to navigate this really tough housing market.
Right off the bat, management's message was, yeah, we see it. The CEO, Andy Oxley, he didn't try to sugarcoat the reality of the market. He basically said that higher mortgage rates are squeezing their main customers, the entry-level buyers. And their response? The key word they used over and over was discipline. So, to protect their bottom line with sales volume dropping, they basically pulled 3 big strategic levers this quarter. First, they started shifting their focus to higher price lots to bump up the average selling price. Smart. Second, they did this opportunistic tract sale that's basically selling a huge chunk of land all at once for a cool $38 million. And third, and this is probably the most important one, they leaned even harder into their big partnership with D.R. Horton. Okay, and this slide right here really shows you the ace up their sleeve. That relationship with D.R. Horton is everything. Forestar already supplies a quarter of all the lots for the home-building giant. But here's the kicker. Their goal is to push that number closer to 1/3. Think about that. It's like having a guaranteed buyer for a huge chunk of your product, a powerful backstop that almost nobody else in this space has. And this is maybe the most crucial point of the whole call. Even with that weak Q1 volume, the company came out and said, we're sticking with our full-year revenue guidance. That's a huge signal. It tells you they have a ton of confidence in their playbook and their ability to hit their numbers, even when the market's looking shaky.
So management laid out this story of disciplined execution. But you know what? The market wasn't really buying it. It delivered a pretty swift and very clear verdict. The stock just got hammered at the open, gapping down almost 7%. And this wasn't some quiet little drop either. We're talking trading volume that was 1.5 times the normal average. It was a classic case of investors selling first and asking questions later. And this slide just lays out the disconnect perfectly. It was like 2 completely different conversations were happening. The company was on the call talking up their strategy. Look at our mix shift, our average sales price, our revenue beat. But the market, all it heard was the hard numbers. That 17% drop in lots sold, the EPS miss, and the big, scary macro headwinds around affordability. So the story that formed on Wall Street was immediate and it was crystal clear. All those negative signals, the slowing volume, the missed earnings, they just completely drowned out any of the positive things management was trying to highlight. All right, so that's the story of Q1. But the real question is, where do we go from here? Let's break down our take on what to watch for in Q2 and beyond.
Looking ahead to the next quarter's report, there are a few key things we're going to be laser focused on. First and foremost, does that lot volume bounce back with the spring selling season? That's absolutely critical. Second, can they keep their gross margins stable, somewhere in that historical 21 to 23% range? We'll also be watching to see how they're tracking against that full-year revenue guidance they were so confident about. And finally, we'll be listening really closely for any change in their tone about those key markets, like Texas and Florida, which have been facing some challenges. All right, so here's our official call for next quarter. We think revenue will probably track right in line with their guidance. Seasonality will help, but that affordability issue is still a major drag. For EPS, we're actually expecting a modest beat, mainly because everyone's expectations are so low right now. And as for lots sold, we're predicting a slight improvement from Q1 thanks to the spring season. But let's be real, the year-over-year comparisons are still going to look pretty tough.
So what does that mean for the stock price? Well, we believe it's basically going to trade sideways for a while. It's range-bound. The market has already priced in the bad news, and now it's in wait-and-see mode. It's waiting for hard data, for proof that the slide in lot sales has finally hit a bottom and is starting to turn back up.
And that brings us to our rating. For all these reasons, we're calling Forestar a market perform. Look, that strategic relationship with D.R. Horton, it provides a really solid floor under the stock, preventing a total collapse. But at the same time, those major headwinds on housing affordability put a pretty firm ceiling on any real upside in the near term. It's a classic tug of war, and the big question for investors is which one is going to break first, that floor or that ceiling? And as always, a crucial reminder, this is not financial advice.